Well, it's been a while since we've had to talk about this, but it looks like the biggest stocks are now starting to underperform the small caps, and it's led by some of the leaders. Salesforce, Adobe, and many other software service and application stocks are now plunging across the board, losing well over double digits. So why is it then that the market has remained so resilient? And is this a sign of something worse to come? Well, the weekly close will be important, but in today's video, we'll also look at the dark pool activity and what the options market is telling us about the next move. Join us as we cover stocks, commodities, and cryptos around the world. There's a lot going on. Let's get into it. Well, welcome back everyone to The Daily Show. My name is Tom. There's a lot to get into today, but if it's your first time here, firstly, welcome, subscribe, and smash that bell icon if you want to bring simplicity to the markets, because they can be complicated at some times. And in today's video, you'll see why. Let's go through software, services, and applications, because they are dropping like a rock. And it isn't just Salesforce. It isn't just Adobe. It's so many of them across the board. And there's something that seems to be reoccurring there. People are not liking the forward guidance that these businesses are bringing out. And of course, that becomes a big concern for the main market, the S&P 500. So will things get worse? Well, in today's video, we'll look at those options, but let's take a step back and check out the macro to begin with. So one of the big stories has been recently that stocks are trying to price in growth. And we can see here on this Goldman Sachs chart we shared over on our X that basically it's been increasing in terms of expectations, but we're seeing US current activity indicators go sideways to down. And that's suggesting that there is some kind of weakness actually in the markets already. Now, a lot of you may be familiar with the idea of stagflation. And when you look at this squiggly line, it's been up, down, and all around. But generally speaking, the idea of stagflation is that we are seeing inflation, which of course we are seeing reinflation at this point, mostly due to central banks. And we're seeing at this point a little bit of growth still in the economy. Now, if that changes and we go to negative growth, then we enter into the dreaded stagflation period. And what tends to do well here? Well, of course, it's gold, silver, commodities, and many of the markets that have been the hottest over the last couple of months. So a lot of you will argue we're already in stagflation. But again, I like to take a step back and say, well, are we in a bull run still? And should we really be terrified of those software services and application stocks? Well, you can see here that we almost entered into extreme overbought the other day by Grant Hawkridge's core market model. And you can also see here that core leadership has been declining in recent sessions. Now, that's one thing, but we know that we're starting to get into a very rare time. Technical warnings, specifically for the NASDAQ, which is, of course, the hottest market, continue to stack up. And we're in pretty much unprecedented levels. These areas we usually only enter into during very, very weird times. Once back in the 90s, then, of course, the famous dot-com bubble, and then the GFC. So we're at a 39, traditionally being a peaking of markets, but we're not quite in those extreme levels. And I wouldn't be surprised at all, by the way, for us to get to this zone. So why is that going to be so important? Well, we have to take a step back again and look at the data and the stats. In recent days, we saw probably what was a fake out. The S&P registering a higher high in the year and then closing down over 1%. And that, of course, was last Thursday, and it alerted us to possibility of the bears getting control of the markets once again. But then we ran over some stats here, and what you can see is that it kind of does lead into sells, but they tend to only last 10 to 15 days before resuming the bull trend. So I think it's very important that we take that step back and we say, okay, are these markets selling? Yes. But when are they getting back in? That's going to be the big question here. And let me just show you all of these huge dark pool activities that we started to see. Here's one from the S&P 500 Growth ETF. Here's one from the Qs, which we saw, of course, a big trade, and we alerted many, many days before. And here's another one that happened just in the last 24 hours with another large position down here. So why this is important is because it's our first big position as markets have dropped off. If the markets then rebound and find buying pressure, which we'll look at in a moment, that could mean that the sell's already happened. Remember, markets love climbing the wall of worry. But for now, we have dark pool activity still pretty much across the board, all looking like it was a sell. And a lot of the time when this happens, there's a little bit bigger sell-off that's around the corner, 3-4%, generally something like that. When we also look underneath the hood, you can see here that there are a lot of markets that are doing well and some that are not doing so well. Most notably, regional banks down 3.49% over the last 5 sessions. Financials also down, even some defensives down across the board, with things like metals, gold, solar, which is the new hot sector, and semiconductors still holding up. But what I noticed is that technology is really starting to get smashed around. And that's, of course, because of software services and applications. So that's the sector to be watching for a rebound in these markets to show heat. And of course, things like Salesforce, Adobe, Intuit, and all of these others are really what I would put in my watch list over the next coming sessions, and we will be watching them together. So make sure to subscribe for that. Have a look here at the last 24 hours. Solar up, home builders up. That's actually pretty good. And of course, internally, we also have regional banks up. Now, if these two are going up, that's actually not bad for the markets. So this could be just a flash sell across all of these major stocks, but we don't know that just yet. So let's have a look at the S&P 500 and check out the delta. As we know, delta dropped down much less than it was though. So the delta was only negative 71, suggesting there were quite a few buyers over the last 24 hours. And when we move over here, you can see that in general, the bears were in control for the session. Now, as I said in our Market Masters Club, which is basically our private community, and if you're interested in checking that out, you can check it out in the links in the description, free 7-day trial. We talked about the idea of the market rallying in the morning, trying to get towards that gap fill, which of course it didn't quite get there. So actually we now still have a gap at this point, and then selling into the afternoon. And that's exactly what did happen. But as you can see here, right in the close, someone did buy. Now, why this is important is because we have to look at where the options are for Friday. And as it turns out, we're actually trading underneath the put support. So we're basically trading underneath the largest put 0DTE for the Friday options expiration. And it seems like between here and here would be kind of the perfect place for the stock market to close for the weekend. So will it be able to do that? Well, we're getting some exhaustion signs. We've hit the anchored VWAP, but we haven't really hit the first major bull level just yet, which I believe sits between 5185 and 5200. This is where I expected kind of buyers to come really in. So is this possible? Yeah, of course, something like that would be pretty sweet towards the buy. Or, of course, if it starts to hit really hard, that's going to close as what we call a weekly evening star pattern. Now, they're pretty rare. They usually show toppings and they tend to lead into fairly decent sell-offs. So if we do end up closing, let's say underneath 5200 for the week close, that could suggest that actually we're moving back down to the deeper level, the 4950, 5000 zone. And as you'll notice when we look at options in just a moment, that is a level of put support. So will it be like that? Well, I think a lot of it comes down to whether we see recovery in the software services and applications area. So let's take a look at the options together, and it's clear that things are getting a little wild out there because 52.55 is now the number one traded zone for the Friday expiration. Now, if Wall Street wants to pay those out, of course it could. We are in negative gamma, which generally means that the market pressure is to the downside at this point. And if we're facing, let's say, lunch or even later than lunch on Friday and we're underneath 5200 or something, it could create what we call a waterfall or a cascade effect where hedging needs to occur to get rid of some of the risk here, basically selling off the futures. At this point, though, it does seem like Wall Street may want to defend that zone. We'll find out whether they do. And you can see puts are now stacked across the board for not only Friday, but also the Monday session next week. When it comes to the June OPEX, things get even stranger. If we lose 5200, which is around this area, we'll move further into negative gamma situation. And as you'll notice, that 4950 we talked about is starting to strike up. And I would expect if we do go down, everyone's going to be on this strike. And basically that will act as a floor for the market should it come down there. So some interesting stuff in a negative gamma environment within options expiration. And clearly the bulls need to take control of Friday if they are to save probably this major bull zone. What's going on in the S&P CTAs? Again, they're neutral. Always follow the CTAs. Make sure you're aware of where they're at and then bring it along with price action. And in the NASDAQ, we did see them go neutral to slightly bullish in recent sessions. So they've been kind of buying a little bit, but not buying out of control like they were a month ago. What's going on here with Brent? Similar thing, neutral on the Brent at this point. Obviously, it looks like Brent it might be actually selling off to a very cool level in the future, which we'll look at. And gold continues to be quite weak on these charts as well. Tesla, yeah, it's holding between that zone we talked about. 175, 180, 175, 180. options being options. So basically we know about 172 is a pretty major support on the technicals. 170 is a major put level. And if you look at the June OPEX again, it looks like there's puts everywhere. So the market is going to try to defend, you would think, and hold up against this area. Of course, if it starts to fall through 170, that's going to be when you move into a full-on negative gamma zone and things will start to cascade and fall across the board. What about Nvidia? A lot of people are starting to get concerned of this. Well, one thing's for sure on Friday, there are a lot of puts here. And again, it may want to defend this zone. It ended up closing at 11.05. The put support's at 11.10, and you can see there's actually quite a lot at 11.30. To me, it kind of suggests that maybe the market will try to hold up on Friday session and fall somewhere around the 11.30 area for the close, 11.30, 11.50. That'd be pretty profitable by the street to be able to do this. You can see right in the middle of those option zones. But yeah, we were in a fairly positive gamma situation, and that started to change over the last 24 hours. Big time frames such as the OPEX, such as next week expiration, still calls across the board. And if the markets do start to resume with Nvidia, again, it will be a fairly aggressive move, you would have to think, especially as we go through those big zones, 1150, 1200, that would get wild and further squeezing would occur. A lot of you in the comment section, which I have noticed, are trying to short Nvidia right now. So you're probably some of the ones that have these puts. And I don't blame you trying to go against a pretty strong trend. But just remember, if the trend is strong, it generally is a bit of a gamble. So options probably are your best call because you can get squeezed out otherwise. But yeah, it is a risk, guys, and we're not seeing it just yet. Inflation during expansions. I just want to mention this. Obviously, we talked about stagflation before. Usually inflation lasts for a while. It doesn't look like the Federal Reserve or central banks or basically governments around the world are doing anything about it. So we might be going into one of those prolonged times of inflation. And ultimately, that does take an effect on markets. But do remember, we are in a cyclical bull market, at least we believe we are at this stage, and that does tend to last longer. So you've got to remain with a bullish tinge, even with the weakness you're seeing in software services and applications. Why, you might ask? Well, we're in an election year, and election years tend to do better. I mean, it's just the reality of life. And it looks like we're on target at this point to effectively see a decent period of time with maybe weakness really reoccurring in markets between September and October in terms of larger pullbacks. S&P 500 weight will also be something that we need to discuss over the next year. It's my belief that semiconductors and hardware in particular are going to enter into a super bubble and things could get completely detached from reality. And of course, I asked you guys whether you thought Nvidia was going to become the biggest stock in the world. And overall, most of you said yes. So could we be going back into something like this, the Cisco Intel of the 2000s or the 1990s? It certainly could be. And remember, if you find a super bubble, it's okay to be on it, but it always ends badly. And I think there's no differences this time around. If anything, 2021 taught me again is that we can see bubbles in anything, because remember, in 2021, it was cool to have a business that made no money. In fact, that was what you wanted to own. You didn't want to own businesses with good cash flow. How the times have changed. Let's jump into the charts. The VIX watched a reaction at around 12. We talked about that. We obviously did get the bounce. Really, the big teller here was the advanced decline line on the S&P. So I encourage you to chuck that on your SPX chart in the future, something we do track. And when we look at bonds and options, they actually started to dial up a little bit there over the last 24 hours. So clearly something starting to arise. Not really terrifying yet. I would expect this to go ballistic if we went underneath that 5,200, 5,185 zone. But clearly the markets are starting to say, well, what's really going on here? As I mentioned, ITB, home construction ETFs, they were actually up through the session. That's actually not a bad sign. US yields remained within the two kind of trapped levels. Central bank liquidity remains relatively supportive. And of course, the American consumer XLY versus XLP actually went up over the last 24 hours. So again, holding its base and becoming quite important. Now, a few of you mentioned DJT to me and said, can we have a look at that? Absolutely. So the transportation average is another one that's been weakening recently, showing us that maybe the economy is starting to slow down a little bit, according to the charts anyway. But it held up and it managed to find a little bit of a wick. So will this weekly actually close bullish? Again, that would be quite a decent sign that the market is going into a shallow pullback for now, and a bigger one might be on the horizon some other period. Dollar index did end up getting close to our most traded level, sold off. We're still kind of neutral bearish on the dollar at this stage. And of course, if it breaks below this low, which is at around 104.25, I'd be pretty negative on the dollar. That would be like having a little double top inside the overall direction, which in recent times has actually been negative. So you might say, well, the dollar will go up if the market falls. Traditionally, yes. But remember, if the market does find recovery in only 20, 30 points away, then the dollar is probably going to start getting hit fairly hard. Copper fell off. I still think copper is probably bullish. Well, I think it's bullish long term and medium term. However, I do think it's going towards 450. This is a great lesson in when a trade becomes crowded. So basically, we have a very crowded market, guys, and we know everyone was on this. You want to be early. I'd like to think we were way earlier than most people back in March when we were talking about this very cleanly. And at the moment, 450 seems to be where I think it could go to. US oil, the confusing US oil. At one period, we were bullish. Then we moved a little bit bearish. We've got a lot of break-even style trades here. We've explained it many, many times on the show. And right now, of course, we are neutral bearish. And what that means is I might not want to sell, even though it has fallen off. Some of you probably have. But I'm looking for this thing back to 72 a barrel. And I really like 72 a barrel. That actually might be a position area. So this is a serious level if it does manage to get down there. And why is oil dropping? In my opinion, this is a very big political game this year. There are people wanting oil up. There are people wanting oil down. And it makes it a fairly difficult, crowded trade. So at this stage, it looks negative. We'll see what happens. Some people calling it a megaphone pattern. I am looking for 72 or a breakout of 80.60, which of course I think will expose around $83. Two decent trades possibly coming up on oil. What's going on with gold? A lot of people talking about the flag here. I've seen it quite a few times mentioned on X. Of course, it hit our supply, which is here. It sold off. It's recovered back to this area. This would be where you'd want to see the bears press it. And I think the important point for the bears here is to get a new lower low. Get a new lower low, push into the red box, but it could still fall off to something like 2175, 2200. This is possible. And to me, even though that would be changing trend a little bit to the downside on daily timeframes, etc., I'd still be bullish on gold because I think when central banks start to purchase, like China has recently, Russia and many others, we are in what we call a currency war. And effectively, gold will be purchased by them, I believe, for quite some time yet. What about some of the major stocks? Nvidia to start with here. Well, as we know, Nvidia has been pretty much the hottest stock in the market. We got a sign the other day that maybe it's exhausted. I tend not to go against these trends. You're basically trying to pick tops off. And I usually am looking for more like this, which is, of course, something we talked about a while ago, which is telling me that we're sideways to down for a while. Definitely a weak candle. Not probably weak enough for me yet, but something that a lot of people are watching. And remember, if it gets through 1150, it's probably going to go straight to 1200. So this will be a very important close. Let's say we had like a market that closed just above. To me, that would be pushing the 1200 narrative. So again, there'll be trades here, but they'll be on smaller time frames, or you'll need to use the options market. Tesla, on the other hand, stuck in the coil, creating a doji, so basically an equilibrium pattern. 172, support, 180, res for now, 180 plus breakout. I think we could go 190, 200. So Tesla actually showing some signs of life over the last 24 hours. Now, before we get into the indices, I want to talk a little bit more about Adobe and Salesforce. Of course, these were hot stocks, and Adobe in particular is really bad. I mean, there's nothing to like about this chart just yet. I would mark out some of the points, such as here, but you'll notice it's making a series of lower lows and lower highs quite a while now. And from the top, it's actually dropped considerably. So if we look at this, it's actually dropped off around 30%. That's no joke. Now, if you have a look at something like Oracle and you put that on a chart, you'll notice this hasn't fallen off a cliff just yet. Been a very strong gainer for quite some time. However, it's chopping and consolidating for a while as well. So again, showing signs of weakness, putting itself right down in that pressure line. And the thing about this is it's a high, a low, and a lower high at this point. So this is not the trend line that I traditionally would usually buy. It doesn't look too good. So one to watch. Then we go over to Salesforce and we have a look at this particular stock falling absolutely off a cliff, filling the gap that was in here on the daily, and of course leaving a big gap behind and coming directly into demand. Now, to me, it kind of looks like it wants to fall off to around 200. And again, this is a scary area to be buying the dip on, because it's had a lot of volume trade, but we don't have any signs of recovery just yet. These are the types of stocks I do look at because there are opportunities here to go long, but you need to see the market actually saying, you know what, that was an oversell. We're ready to pick it back up. Maybe it was an oversell. Maybe everyone's getting a little bit scared, but certainly it seems to be a trend. And this sickness seems to be in all of these software service application stocks. And it's one that we must be watching closely. Aussie 200 fell, then rebounded, sat in the middle. Interesting one. Probably financials really helping this. Of course, we saw KRE, regional banks, start to recover over the last 24 hours. And it's starting to get signs of oversold action. So you can see here, we got a stop sign up here, one of my custom kind of indicator things. And then down here, we're starting to get, a little bit of support. So maybe the worst is over for regional banks for now. And if that's true, that is a good sign for the undercurrent of the markets. And again, this is why we're in such a convoluted area. 5,200, 5,185 for the S&P is a very important zone. What about the Chinese stocks? A lot of people asking about these. Well, I've hit my first area. I've talked about this a lot. And I am waiting to see whether we end up getting some buy pressure. Now, will we get some buy pressure? It's a good level for it to happen in. Same with 17,700. That would be a good level as well. And we just haven't really seen anything just yet. It's kind of tried to rally. It's failed at this point. I am looking for the signs of turnaround because, of course, we've been talking about Chinese stocks for quite some time being a underappreciated AI sector, I would say. What about the Dow Jones? Not too much movement here, actually. The Dow could be heading for a double top, which we mentioned, but it's not underneath the support or the demand level. So there's no reason for us to be terrified or concerned just yet. So the Dow Jones still holding up fairly well. Same thing with the US 2K, actually bouncing back up. And a lot of this was thanks to solar. Now, solar has been the hot sector of the last week. We've talked about it a lot, and it's really running. And a lot of it's got to do with governments. So obviously the US government imposing tariffs, other things, beautiful Wyckoff pattern. I do love me some nice patterns. So it is running at this point, and it's still down a lot. So yeah, solar improving, small caps finding a little bit of rotational buying. Again, the sickness seems to be in those software service applications, and that hit the NASDAQ over the last 24 hours, hitting its first major demand level, being the 18,458 and the 20 daily moving average. So there's a couple of stocks, anchored VWAP on the US 500, Dow not quite at the right levels, and of course the NASDAQ hitting the first little level of support. But yeah, it's starting to look a little sick out there. And again, if options markets and we see price continue to hold down, we're in negative gamma. So that creates that selling pressure, especially into the Friday. And if the weekly closes with an evening start, that's going to be a nasty pattern. What about the Bitcoin market? Well, it doesn't seem to care at the moment. It's just in chop. And as we know, the longer it coils, the better it is for an extreme breakout. So I'm actually not sad it's coiling. It's holding above the daily 20 moving average. And what I'd love to see this do is actually move towards the upside, break through 72K after some nice coiling. And it could be an explosive move, maybe moving to 80 or even higher very, very quickly. The thing about Bitcoin is when it sits for a while and it starts going, as you guys know, the froth, the FOMO comes in very, very quickly. So what are the markets going to be relying on? Well, as always, there's a little bit of news that will get it going. And this one is going to be no different. Core PCE price index, basically what the Federal Reserve uses to kind of figure out inflation and stuff. That's coming out here on Friday at 8:30 a.m. So this is going to be a fairly important figure. I think it will rock the markets a little bit. And at this stage, if I had to guess, I would say the markets will try to come up and get above that put level. Remember, there has been a lot of buy the dip reflexes, got a couple of sell days, puts everywhere in those 0 DTEs. So maybe it'll try to hold a little bit higher. As always, nothing is guaranteed. So you've got to really think about it and put it in the markets. We have been correct so far this week with this weakness. I'd like to see the markets at 5,200, 5,185, then find a nice turnaround. But we'll have to find out how this weekly closes. If you're interested in finding out anything else about what we do, you can check out us on the other socials, follow us on X. And thanks so much for subscribing and smashing that like button. Guys, it's going to be a very interesting weekend video. I look forward to it. And be careful in those software and sales application service stocks. I'm sure there'll be an opportunity there, but maybe it's not just yet. Bye for now.